following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain. Thank you for joining us today. We've got a great show lined up for you. All of our ideas, or most of our ideas for the show, come from our viewers and listeners. We pick up some information from the news wires as well as some general concepts that I like to talk about. But we encourage our viewers and listeners to give us a call or email us. Let us know what you're thinking. Our phone number is 252-633-0107. And our email is allthingsmoney@dlblain.com. That's allthingsmoney@dlblain.com. And of course, you can always visit us on the web at website www.dlblain.com. You'll find a contact button there as well as archive copies of the show. So I heard about this the other day on the Clark Howard show. He was talking about the Zeek Rewards scam, and so I had to look into this. It never ceases to amaze me the number of people that are out there that get scammed all the time. And you know, we run a very high quality investment management, wealth planning business, and you know, we're always looking for new clients and treat them like gold. I mean, finding a good quality client that appreciates what we do and everything. I mean, it takes a long time. It takes a lot of effort. And then I read about these scams about this Zeek Rewards. More than 1 million customers in this Zeek Rewards thing. I heard on Clark Howard that they were promising returns of 1% per day. Per day, okay? Not 1% a month, which is a little bit high, but could possibly be, you know, somewhat plausible. You can't get that in today's market, but it could be somewhat plausible. But 1% per day is what they were promoting. And anyway, so this comes from the Wall Street Journal back a week or so ago. It says the SEC has shut down ZeekRewards.com, a $600 million online Ponzi pyramid scheme, raised money for more than 1 million customers. Once again, it just doesn't cease to amaze me. You've got people out there that do a good job for people, you know, advising them like we do on investing, taxes, estate planning, things like that, and, you know, constantly cultivating and looking for new clients and just treat them like gold. And here it is, this Zeek Rewards, 1 million customers. Anyway, Paul Burks of Lexington, North Carolina, his company Rex Venture raised the money, which they began in January of 2011, so it's just 18 months old. He, you know, came to some settlement with the SEC, but customers were offered several ways to earn money through the Zeek Rewards, 2 of which involved purchasing investment contracts which weren't registered. They were promised 50% of the company's daily profits through a profit-sharing system in which they accumulated reward points and could be used for cash payouts. It says that they fraudulently conveyed that the company was profitable when most of Zeek Rewards' revenue was paid to investors was composed of funds received from new investors. They said that their outflows would eventually exceed its total revenues, and last month the company brought in $162 million last month. Total investor cash payouts were $160 million. It's just amazing that it was basically just a pyramid scam where people put money in, and it's unbelievable the stuff that people get caught up with. The number of people, you know, 1 million people paid out $162 million last month. I mean, that's a lot of money, and we're not talking about $1 per person either. Anyway, Okay, just stay away from that stuff. If you got any questions on an investment or something that's proposed to you, even if you're not a client, send us an email, give us a call. We'll be happy to look at for you. Just remember, if it seems to be too good to be true, that it probably is. I wanted to spend some time today focusing on some investment principles. We had a great comment or question from a client. They were looking at their portfolio, and the performance the past couple of years has been kind of lackluster for anyone invested outside of the U.S. Foreign markets, I was talking about this the other day. If you were a client, and you were a German client, you're looking at your portfolio and you're heavily focused on European investments, I mean, you're really upset. If you're a U.S. client, the NASDAQ has been going crazy. We look at some returns, and now 2011 wasn't that brilliant, about a 1% return, but so far in 2012, U.S. returns have been very good, but around the world, not so much. Commodities are beginning to perk up, but not too well. Anyway, but it reminded me of something that I heard from Jeremy Grantham one time, and Jeremy Grantham, you've heard me talk about him before. I like to listen to people that have been around for a while. Now, of course, I'm not that old. I've been doing this business for about 15 years now, and I've been involved with the markets for close to 25 years now. But even so, which may seem like a long time, especially a lot of the new people who've just been in the markets for a few years, but I like to listen to people like Warren Buffett, the Jeremy Grantham. Now, Warren Buffett's a little unusual because he buys whole companies. We've talked about this before on the show, that some of his advice may or may not be appropriate when you're buying publicly traded. But you look at people like Jeremy Grantham that have been in the money management industry, since the 1970s. His company that he's a director of, GMO, it used to be Grantham, Mayer, Otterloo. I guess they either Mayer and Otterloo, or maybe they're dead, or it was too long to pronounce. Anyway, they go by GMO today. Just a wealth of information, been around for a long time, got a great head on his shoulders, and is very value conscious, understands investor psychology, has seen these cycles come and go. And he talks about the ebb and flow of investment style. And that's kind of what I want to talk about today, is that anyone that has a globally diversified portfolio the past couple of years with exposure to foreign markets, emerging markets, Europe, commodities, foreign real estate, things like that, it's been very lackluster. And here in the U.S., the blue chips have been doing extremely well. Even small caps, not really that well. Certain industries and certain sectors have not been doing that well. It's mostly been driven by your large cap consumer type companies and technology companies. So outside of those, any type of diversification has not been very good. Of course, bonds have been doing fairly well the past couple of years as well, due to the declining interest rates. But what we want to talk about is why that is the case, and why or why not you may want to switch style. Well, that brings us to our first break. When we come back, we'll continue speaking about the ebb and flow of investment styles.